What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we saw a volatile sell-off across the board, and tonight we'll look at possible scenarios of where this correction could finally reach a bottom and what to look for to know that we are reversing the correction. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did see a volatile sell-off and we were down 1.77%. And we did get our first price action close below that macro level support trend line, which has contained all dips all the way back to October of 2020. So now that we're starting to break down below this level, we can definitely start seeing the scenario where we could see the stock market start to reverse and we could start going much lower. Now, I'm not going to go over this again, but I did talk about this in the weekend episode on how this could possibly be an entire stock market correction that we've been going through going all the way back to November. So the question isn't really whether or not we're in a stock market correction, because we already know that we are in a correction. And a lot of that correction has been going through time, so it was not apparent until we did have this recent price action. So now that we're starting to get this price action looking this choppy, we know there's no impulses to the bull side any longer, which tells us this was all corrective price action, and we're now trying to figure out where this correction is possibly going to find a bottom. So you can see with today's price action breaking down below that macro level support trend line is telling us that the bull market is weakening, and that's exactly what you're going to see in a stock market correction. So we're getting more and more evidence that all of this price action has been a stock market correction, and because we have that factor of time associated with it, we don't necessarily need a sharp pullback in price. So the first thing I would caution you to do is not to get overly bearish, because we have been going sideways for so long. There's actually no guarantee that we need to see a sharp decline through price. I think that's one of the main reasons we're not getting that extremely high volume selling that we're accustomed to seeing, which you can clearly see looking at the volume. We're not quite at those high volume selling days that we're used to seeing on high volume selling. So yes, we did go down 1.77% today, so don't ignore that, but also remember we're coming into very strong support here. So SPY 455 is going to be a very critical support level, and that was the gap close on SPY, and you can see intraday we did bounce off that level. So SPY 455 will be a very strong support level to pay attention to, and if we break below that level, I do think we will retest SPY 450. So below 455, you're looking for a retest of 450, and if we do break down below 450, I think we will come down here to close all of these gaps below, and those gaps are in the 440s and then the gap at 436. So what you're looking for right now on SPY is a breakdown below 455 to tell us that we're going to 450, and if we break below 450, I would start to assume we're going all the way down to SPY 436. Now remember, nothing happens in a straight line, so even if we do break down, we'll more than likely still see a higher low bounce, and then we could come back down to close that gap at 436, and then that could be the end of the correction. So one thing I want you to know is if you are looking for an exit because you're over leveraged and you're trying to get out, typically speaking, you will want to sell on the higher low. And right now, this is still a strong support level. So the higher low would be at least a retest of the support trendline breakdown, which is right around 459 to 460. If we break above that, you're looking for a retest of 462 and the 50 EMA right around 464. So more often than not, remember, nothing goes up in a straight line forever and nothing goes down in a straight line forever. So if you're looking for an exit strategy, typically you will want to sell the bounce. Now, if we start to break out back above the 50 EMA, which is right around 464 to 465, that could tell us we did reach a bottom and the bulls are starting to take back control. Now, the longer we stay below the 50 EMA at 464 to 465, the more the bears will start to take over, and we will start to see this bull market roll over. And once the bull market rolls over and starts to lose its strength, eventually it will die and you will start to get that sharp decline through price. So this is a lot to pay attention to, but essentially what I'm telling you is once we do lose support down here at 450, the bears will be in full control and you're going to see that correction through price, which is telling you to expect SPY down in the 430s. If the bulls can hold these support levels, you're going to continue to see this choppy correction through time, and eventually the bears will get worn out and the bulls will start to take back over. So you need to really pay close attention to SPY levels of 455 and 450, and that's how you'll know you're going to get the correction through price instead of the correction through time. Now, if at any point we can break out above this resistance trend line around 466, you're looking for a retest of 470 and 472, and as I've told you many times, SPY back above 472 will be very bullish, and you should be expecting to see a brand new all-time high when we do break back above that level. So navigate this market very carefully because it's going to be extremely choppy because we don't have a trend for the bears or the bulls. So expect to see plenty of whipsaws in both directions, which does mean you should be expecting to see bear traps and bull traps alike. So make sure you have a very strict plan and you know exactly what you're doing at all of these levels, and don't just continue to switch from bear to bull depending on what the price action is doing, because you're more than likely going to get whipsawed and you're going to be losing in both directions if you try to play both sides and you don't have a strict plan. Jumping over to the NASDAQ 100 triple Qs, you can see the triple Qs were down almost 2.5% today. And again, we did break below that critical macro level support trendline, which was right around triple Q's levels of 376, and we did close right around 370.5. So now that the triple Qs are breaking down below these support levels, we're more than likely coming to retest this low right around 369, and we will have a support level down here right around 368. So you can clearly see that these markets are starting to weaken because we're losing some of these macro level bull supports, which does mean the bears will start to take over control and the bears will have the advantage. You can see the triple Qs are developing some bearish trending, and once that 20 simple moving average crosses below the 50 EMA, that will be a bear trend. It hasn't happened yet, so don't just assume it has to happen. Continue to watch it and look at the price action levels below. If the triple Qs break down below 368, you're looking for a quick trip down to close the gap at 360, and that should be a very strong support zone. Now to the upside on the triple Qs, you can see the resistance trend line is going to be right around 382, and the 50 EMA is sitting up here right around 388. So there's a lot of room to the upside for the bears to short at resistance, which is going to make it very difficult on the bulls to break out above these resistance levels. So if at any point you see the triple Qs trading back above 383 or back above 388, that will be a lot more bullish, but don't expect that to happen very quickly because that is a lot of resistance to break back above. So you can clearly see these bull markets are weakening because we're starting to lose critical support. So you need to be a lot more cautious and understand we could be losing the macro level bull trends as well. We'll need to see where we close at the end of the week on Friday. Jumping over to the Dow Jones, we were down 1.47% today and we did gap down. So the Dow Jones price action is now trading between two gaps. The upside gap will fill right around 356 and the downside gap will fill right around 349. You can see the price action is below the 50 EMA for the first time, so we will want to see a second day closing below that level. So if at any point the Dow Jones can break back above 358, that will be a bullish breakout. You can see we lost the bull trend, so don't get overly bullish while we don't have the bull trend, and do look for the possibility we're coming down to close the gap at 349 if we do break down below about 351. So to the upside, look for resistance right around 355 to 356 and that 50 EMA at 358. If we break down below the gap at 349, your next strong support level will be down here right around 344. In the Russell 2000, we were down over 3% today, and the Russell 2000 is getting very close to that support level at 207. If we break below 207, look for strong support at 205, and below 205, you're looking for the gap close at 197. You can see the Russell 2000 is very clearly in a bear trend, so the path of least resistance is still lower, and we'll have strong resistance at 214 and right around 217. If at any point the Russell 2000 can break back above 222, that will be a bullish breakout, and then you'll be looking for resistance at 226 and the full gap close right around 228.6. Until you see that bullish breakout, expect to see lower prices and watch those support levels below. On the Arkk ETF, we were down over 4% today and we did close below $78, which means Arkk could be heading down to the next leg lower at $70. Remember, this is in a strong bear market with a strong bear trend, and price action continues to slice through support. So don't bother getting bullish on Arkk until it can at least break back above $91. Otherwise, continue to expect lower prices with resistance at 81, 85, and 91. On the VIX, we were up over 18.7% today, and the VIX did close back above 20. So this is that zone in the VIX where you need to be a lot more cautious because it means more volatility is coming into the market. If the VIX starts closing back above 24, that could mean we have a lot more downside coming. Otherwise, expect this to be a very volatile and choppy market until we can see the VIX closing back down below 20. On Bitcoin, we're currently up about 0.58%, and Bitcoin is still trading above that support level at 40,600. If we break below that level, you're looking for support at 38,000, and below 38,000, you're looking for a retest at 30,000. Bitcoin is still in a bear trend, and price action is still getting rejected at resistance, and we won't have a bullish breakout until we can get back above at least 46,000 and eventually break back above 51 to 53,000. So Bitcoin is bearish until it gets a bullish breakout, which more than likely means the price action is going to continue to trend lower towards support until we see one of those bullish breakouts in the price action. So don't get bullish on Bitcoin while it's in such a strong bear trend. wait for the bullish price action confirmation, and wait for a reversal of the bear trend. On NVDA, we were down 3.86% today, and we do see NVIDIA is starting to trend down towards that support level at 253. 253 should be a strong support level, but if we lose that support, you're looking for a quick trip to close the gap at 233. There's really no support in NVIDIA below 253, so it could be a great shorting opportunity if that support level does start to fail. Now to the upside, you're looking for resistance at 271 and a bullish breakout back above 282. And then the next bullish breakout above 282 will be a close back above about 293. Don't get bullish on NVIDIA because you can see it has a lot of bearish momentum and the price action is slicing through critical support, which does mean we could continue to trend lower. On Tesla, we were down 1.82% today, and we did close just below the 50 EMA, and we are starting to lose the bull trend. You can see we got rejected exactly at the resistance trend line right around 1072, and we did close below support. So on Tesla, there's only one more line of defense for the bulls, which is the support level at $1,000. If we break below that, you're looking for a quick trip to close the gap at $939, and below that, a retest of support at $900. The bullish breakout will be back above 1070, and if we can break out back above 1070, we'll need to break out through resistance at 1107, and then we could start to see another bull trend that could take us back into the 1200s. But right now we're losing the bull trend and we're losing some critical support, so be cautious to the downside and look for the potential breakdown below 1000 for a quick trip to close the gap below at 939. On Apple stock, we were down 1.89% today, and we see Apple stock is starting to trend back down to this critical support level at 168. Remember, if Apple breaks below 168, you're looking for a price target at 162 and then 157. To the upside, we'll need to see price action back above 176 to get bullish, and then we could attempt to break out back above 180 and possibly still see that price target hit by earnings at 188. Because there is earnings coming up, we could see price action going volatile in either direction, so make sure you're watching these very critical levels at 168 and the bullish breakout at 176. On the financial sector, we were down 2.23% today, and we did close the gap below, and we still have the gap above. Price action still above the 50 EMA and the 20 simple moving average, and we still have a bull trend, so it is possible we bounce from here and close the gap above. The industrial sector was down 1.15% today and did close just below the 50 EMA and starting to possibly lose the bull trend, so this is going to be a very critical level of support for the industrials. The healthcare sector was down 1.4% today and did close back below the 50 EMA for the third day in a row. This is clearly some bearish price action and we're starting to lose the bull trend, but we still do have to respect that gap above. The energy sector was up 0.4% today, and the energy sector continues to look very strong with very strong bullish price action and a very strong bullish trend. So jumping back over the S&P 500, you can clearly see this is going to be a very volatile time in the market, and this is going to be a very critical support level for SPY. We're only down about 5% from the all-time high, so we really haven't seen a sharp decline in price action just yet. Remember, there's still the possibility this has been a correction through time, and we could still come off of these support levels with a very impulsive bull rally, so you can't rule it out completely. Watch those very critical support levels and make sure you're prepared for any scenario, and continue to watch the price action at these levels. Don't forget, we're going into earnings season, so there's going to be plenty of volatility, and remember that volatility does work in both directions, so be very cautious that you're not getting whipsawed. You can have a very volatile sell-off one day, and then the next day you can have a very impulsive rally, so just be prepared for any scenario and do your best not to get whipsawed. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message, and only trades the ETF TQQQ. You can see here that Bank Trade Alerts will beat the market and make great returns whether the market goes bearish or bullish. So even if we're going into a bear market like 2008, Bank Trade Alerts is going to make a profit and going to beat the market. If you're interested in learning more about Bank Trade Alerts or how to subscribe, you can find out all of the information in the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.